Everyone, welcome back to the channel. Today we're going to take a look at Alibaba some more. And before I release the DCF, I wanted to do just a quick little video on the structure of buying Alibaba, which I think is an important thing to understand because there's definitely some inherent risk there and something you should research more before thinking about purchasing Alibaba. But first, how are they structured? They're a variable interest entity. So what that means is you're not actually buying Alibaba. You're buying a shell company that has a contract with Alibaba. So what this means is basically in China, there's regulations in place that limits foreign investors into Chinese-based companies, and they can only own 50% or less of a domestic business. So what Chinese companies have done is the Cayman Islands, there's Virgin Islands, they create a shell company, and the shell company signs an agreement with the Chinese-based company saying like, we get 100% of your profits. And it's this agreement where basically it's like a kind of a weird loophole to basically give you interest into the Chinese company without actually owning the Chinese company. So to kind of bypass China's um, regulation of less than 50% foreign investment. So it's definitely a very interesting structure, and it's something you should definitely read up on. You don't get voting rights. It's very, very uncommon. I don't actually think any of them have voting rights. I know on occasion, like if you look at Alibaba, Yahoo and SoftBank have like a formal agreement where they get some voting rights through their equity stake, but the common investor doesn't. And I think a key thing to understand here is you don't actually own the underlying equity in the company. You own a shell company that has a contract with the company. And the next slide here, we're going to talk just a couple of risks really related to the VIE structure. I mean, it's in the event that Alibaba decides to not share profits, right? Which, I mean, paying dividends is probably like a whole nother issue. I don't know how you would, I mean, I'm sure you could pay the dividends out, but it's probably a legislative kind of nightmare to actually get dividends out. But I mean, I'm not entirely sure about that. So that'd be something to look into if that's even a possibility in the future. But forcing Alibaba to actually uphold this agreement with the VIE, if Alibaba for whatever reason decides like we no longer want to, abide by this agreement, well, your VIE becomes worthless. And if that happens, it's not like who are you going to go to? China? China's be like, no, you were going around our loophole, right? So um, it could be very difficult to actually enforce the agreements. The next part is it's just a less effective method of owning securities, right? When you can have direct equity ownership, there's not all these hurdles, right? So if you can find companies with the direct equity investment, which obviously if you want to get into China, you have to go through the VIE structure, just simply put. But there's been some research out there. I didn't read too much into it, but it looks like there are some inefficiencies with the VIE structure that kind of dilute shareholder value. Um, I think a big one is China at any point can just say the VIE structure is illegal. They haven't like directly stated it, and I don't think they will directly say that the VIE structure is illegal. But who knows? I mean, my thought here, based off some stuff I read online that I thought was pretty convincing, is if China were to come in and say like all VIEs are illegal, then basically what happens is foreign investment into China just stops, right? Like you're not going to go invest in anything in China as a foreign investor because you just don't know if the Chinese government is going to come take it away. So I think from that standpoint, like China wants capital to flow into their country still. So I don't see that as being necessarily a huge risk, but I mean, who knows? They could do that at any day, and that's their right and their prerogative in their country. Um, and the last thing is just company owners. So like for Alibaba example, like Jack Ma and the other founders own 100% of Alibaba, and then they've signed agreements with the VIE, and then they own substantial portions of the VIE. But essentially, if they own the business, they can spin any business unit off without a payout to the VIE owners. And a perfect example of this was Alipay or Alipay in 2000, I don't remember what it was, 2000, was it 2014 or 2004? I don't remember when it got spun off. But basically, SoftBank and Yahoo both had large stakes in Alibaba through the VIE, and Alibaba just spun off Alipay and said, "Hey, sorry, it's it's a new business now, and you don't get any equity stake in it." So you don't really share in the full business per se. And I think the Alibaba explanation was the Chinese government told us we can't have foreign investment in financial services, which I mean, that's fair, right? They're, but this kind of goes back to the point of, China at any point can declare VIE structure illegal or declare, we actually don't want foreign investors in that part of the business. So for some reason, if cloud computing really takes off and China decides they don't want that piece being a part of Alibaba anymore, it gets spun off into a separate Chinese entity and you lose any ownership stake you had in it. Um, so there's definitely risk there. And I guess that's what I want to kind of highlight. In the last slide here, while not pretty, it shows you the VIE structure of Alibaba. To the top here, you'll see when you buy Alibaba, that's Alibaba Group Holding Limited. It's based out of the Cayman Islands, trades on the New York Stock Exchange under the ticker BABA, and then the Hong Kong Stock Exchange under 9988. So if you read online, there's some people thinking like, oh, if you buy the Hong Kong Stock Exchange one, you're actually buying Alibaba. You're not. You're still buying the VIE. Um, that it's clearly stated in their 10K like that these are what you're buying. You're buying the VIE. You are not buying actual Alibaba. And then from here, you can see they just have a handful of shell companies, right? Um, but the big thing to note here is if you see the dotted green line in the middle here, that denotes what's inside and outside of mainland China. So you have all these holding companies outside of mainland China, um, mostly in the Cayman Islands and the Virgin Islands, and then one in Hong Kong. Um, and then inside mainland China, you have another handful of holding companies, that top level there, that are all basically 100% owned by the VIE in some various form. And then the Hangzhou Sinow Supply Chain Management Co. I probably butchered that name, but you only own 66% of that. But then what you'll see here in the bottom, the four on the very bottom here, Zhejiang, Taobao, Tmall, Cloud, and Youku Information Technology. These four, you'll see the orange dotted lines. What that represents is that's the contractual agreements. So these four companies, all owned by Jack Ma and the founders and the Chinese government, have signed contractual agreements with these holding companies to say we will pass on 100% profits, or you have 100% stake in our profits, right? So at any point, right, like Alibaba Cloud Computing, if that becomes big, right, Chinese government come and say, you know what, we don't want foreign investment in cloud computing anymore. You need to go put this somewhere else, um, and take it out of Alibaba. And I think with Alipay that happened, and then we saw like Ant Financial was going to go public, and then that whole thing got squashed. And so I think there's just like a lot of uncertainty and questions there, but I think it's important to understand that this VIE structure is pretty complicated and you're not actually owning the underlying securities. And while I don't think, these companies are necessarily going to just cancel the VIE contract, right? The contracts they have, it's something to consider. And I think as we do the valuation, we may find out that Alibaba may actually be underpriced per se from a value investing standpoint or from a fundamental investing standpoint, but I think there's a lot of inherent risk there with the structure of the company and not actually owning the entity itself. And I think being able to adjust for that is difficult. And if you watch the WACC video, you'd see like the WACC came out to like 7%, which is just crazy low, using the CAPM model. Like this isn't a super there's a lot of foreign investment risk per se or political risk that just isn't captured in a WACC or a CAPM model. So it's just something to also keep in mind, as we kind of look through and work through the DCF. So let me know if you have any questions or comments.